Welcome back to the nationally recognized Real Estate Radio Network's Don and Gino Real Estate and Finance Radio Show on your hometown station, AM 1220 KHTS. Make sure to get great information or ask your important questions at donandgino.com. Now, back to your friends, Don and Gino.
We have been your friends. We have been your friends on the radio now. Your resource for quality information about real estate and finance now going almost on 3 years, believe it or not. That's right. 140 shows now. You should check out our website at donandgino.com and gather some of this great information that we've received from experts like we have today with Chris Ingram from Infinity Wealth Management. These are great clips. You can go to our YouTube channel. Just click on the YouTube logo at the top of our webpage at donandgino.com. And you will see 200 and some clips, I swear, of just great clips. Especially now, you can see us in our beautiful new custom-built, the Vault Studios.
In HD.
What do you think about the Vault Studio?
It's amazing. I love it.
Isn't it cool?
Yeah, very nice.
And then, of course, we got AP Productions now. They sit behind the scenes here, but what's cool is they run this magical little machine that moves the cameras back and forth between us and Chris and the entire studio, making us look good.
Yeah, that takes a lot of work.
Like a real show. That's right. So thank you for joining us, and Merry Christmas to you. Hopefully your Christmas was amazing, and thank you for listening on us. We brought in Chris to talk to you about year-end solutions and strategies regarding your portfolios. And if you don't have one and you need somebody to talk to, Chris Ingram is the man. So we wanted to talk about some of the things that people should think about year-end. So, Chris, I'm going to let you dive in because you know let's say the top 3 things that they should be thinking about. Obviously, IRAs, but we'll go on that. That's the obvious one, so we'll go on that later. I know you have something a little bit more in-depth that we need to go in-depth on to clarify what it means to them.
Right. I guess the first thing we'll talk about is tax harvesting. Okay, so at the end of the year, it's a good idea to take a look at your portfolio. And if you've been buying and selling and trading within the portfolio throughout the year, you have some what are called realized gains or losses for the year. This year, being a good year,
right,
a lot of people are sitting on realized gains for the year, and that means that those gains have been locked in and they are taxable. Now, this doesn't apply to retirement accounts because they're tax-deferred accounts. This is your joint accounts, your individual accounts, your trust accounts that you're investing in, your taxable accounts. So these realized gains are now taxable, and you're going to pay taxes on those when you file your taxes in April. So something you can do is then go through your portfolio and see if you have any losers in your portfolio. Are there any losses that you can book those losses, make them realized, and counteract some of the gains in your portfolio? So let's say you have $6,000 of gains in your portfolio, and you look through your portfolio and you realize you've got about $3,000 of losses in the portfolio. You could book those losses. Now you only have $3,000 of gains instead of $6,000. You've now adjusted or made a wise tax decision for the portfolio. Another way to look at this is a lot of people, and I meet them all the time, they're still carrying very large losses from 2008. So I'll meet people all the time that they're carrying forward a $50,000 capital loss that they booked back in 2008. If you have a lot of gains in your portfolio this year, it's a good idea to book some of those gains, use that capital loss to offset those gains so you don't pay taxes on that, and take advantage of that tax kind of loophole or whatever you want to call it. Just good, solid tax
strategy,
planning.
right?
Maybe
so this isn't automatic, though.
This
is
isn't
something you got to
automatic.
pay attention to.
Well, and this is another benefit of having somebody like me, because I look through my clients' portfolios and try and figure out, do we have these issues? What can we do about it? I also try and keep track of if I have a client that has a capital loss that we've been carrying forward. It's difficult for the individual investor to do it on their own. So talking to somebody and being able to sit down and look at it. But if you have a financial advisor, sit down with them, go through the portfolio, talk about what opportunities may be there, and make some changes.
Well, that's important. And again, if you just tuned in, we're here with Chris Ingram with Infinity Wealth Management right here in Santa Clarita. I mean, you've raised your family here. How long you been out here? Pretty much your whole life, right?
Pretty much. I mean, I was actually, my parents moved here when I was born, and then they moved out to Thousand Oaks, and we lived in Thousand Oaks for a while, and then when I went away to college, my parents moved back out to Valencia, so we've pretty much been here ever since then.
Yeah, we kind of know the Ingram family out here.
Yeah.
Your mom being one of the top, mom and dad being involved in the real estate industry, your mom being one of the top. I mean, we're talking a Hall of Fame real estate agent, Remax, one of our great real estate professionals we work with. Your mom kills it, by the way. You know that?
Yeah, she does a good job. She's having a great year.
She's very proud of you, too, by the way.
Yeah, thank you.
She comes in here all intelligent-wise for a real estate agent. Well, don't get it wrong, but a lot of real estate professionals learn the financial side of things. She goes, well, I'm proud. I sit down with my son, and I learn all this stuff.
Very nice.
Yeah, it's very cool. Plus, she goes to the gym, too. She's a machine.
Yeah, she's one of the hardest working ladies at the gym, yeah.
Oh, yeah.
Crazy. I mean, I go in the spin class with her, and she's in the bike in front of me. I can never catch her.
Yeah.
No, she's a machine. You just don't pick on my jokes, Gino, until you come up with better ones, buddy. All right, you're here with our holiday special on the Don and Gino Real Estate and Finance Show. We're here with Chris Ingram with Infinity Wealth Management, and Chris has given us some tips and things you should know about that could save you a lot of money. But everybody would probably think, Chris, I mean, that, oh, it's in my portfolio. I just automatically will get a statement that breaks out my losses versus my capital gains. And I love the fact that you bring it up to, like, no, that doesn't just happen. I mean, just like if you have losses that could be a write-off, you have to tell your tax man what they are.
Right.
That way, same thing. So if you talked with your financial planner, so please speak with your financial planner about some opportunities. If you don't have one, make sure you reach out to Chris. Chris, what's a great way to get a hold of you?
Best way is to just give me a call. Phone number 661-255-9555. I'm at extension 16. You can shoot me an email at cingram@nextfinancial.com. That's NEXTfinancial.com. Or you can check me out on the web, which is www.infinitygoals.com.
Goals. It's all
I
about
hope
your
you
goals.
have goals.
Yeah. If you don't, talk to Chris.
Yep.
Gotta have them.
You know, that's something that we're going over here is really tax strategies. And it's good that, you know, within the financial planning umbrella, you're looking at tax strategies because, you know, from numerous financial planning seminars that I've been to, nothing affects the end result of how much money you gained over time any more than taxation. Taxation can devastate a portfolio over time.
Right.
Because it kills your ability to compound the money. So I think it's really critical and super important. So if your financial planner hasn't been talking to you about tax strategies and how to avoid taxation, yeah, give Chris a call.
Yep. All right, and we all know about this one, Chris. Of course, every year everybody hears about IRAs. The ability to purchase an IRA, therefore offset potential income. Let's talk a little bit more of that in depth. Why do people do that? Why do they purchase IRAs, and what are the limits now? Those change all the time.
Yeah, if you're under 50 years old, the limit this year is $5,500 that you can contribute to an IRA. If you're over 50 years old, it's $6,500. You get what's called a catch-up contribution. It's an extra $1,000 that you can put into your IRA.
The only thing to look forward to when you're 50.
People use IRAs two different reasons. I mean, the traditional IRA, you get a deduction against your income for the contribution that you make to the IRA. So a lot of people use that IRA as a tax deduction on their tax return. And the money is tax deferred. So everything I talked about before of trying to play this tax harvesting game, you don't have to worry about it because IRAs are tax deferred and you don't have to worry about the taxes till you start pulling money out of the account. A Roth IRA is a little bit different. You don't get a deduction for making the contribution to the Roth, but all of your contributions and all of your earnings come out of the account tax-free after the age of 59 and a half. So it's a way to not only not have to worry about the tax harvesting issues while you own the investment, but when you pull the money out, you don't have to worry about taxes either. It's tax-free income during retirement, which is pretty cool.
So I would imagine it's determined on their scenario, their tax brackets and all that, which direction they should go. Because I know I have clients all the time go, should I just do a standard one and do tax deferred, or should I pay the taxes now and get it done?
Yeah, some of it is, what is the deduction really going to look like to you, and how much is that money you're going to save in taxes going to be able to compound if it was kept in your pocket and in your investment portfolio. Another one is age. If you're just starting investing, you're 21, 22 years old, Roth is great. I mean, you figure that first contribution you make at age 21 compounded over the life of your working years. I mean, there's going to be some significant earnings there that you're going to get to pull out of the account tax free. So it's really, I tend to sit down with people and crunch the numbers. How's it going to work out for you? Which one's really going to be better?
So you can weigh this out. You can do an analysis based on their age and tax brackets, potential income, future income, all that type of stuff.
Definitely, yeah.
Very cool,
Yeah.
very cool. So this is why you need to be listening, one, to the Don and Gino Real Estate and Finance Show, especially when we have somebody as smart as Chris Ingram giving you financial advice. And that's why we brought him on. All right, Chris, so we have one more segment coming up. We're going to talk a little bit more about year-end tax strategies. Got some more for us?
I do, yes.
All right. So don't go away on the Don and Gino Real Estate and Finance Show on our holiday special, talking about how to properly, structure your financial portfolio. When we come back with Chris Ingram and the Don and Gino Real Estate and Finance Show, we'll be right back.